very excited about Auswide's future because we're winning more customers. We're certainly doing more in the home loan space than we've ever done before. And we're getting greater consideration. The Auswide brand is getting better known. Partnership with the Maroons that just won the State of Origin is helping enormously.
Auswide Bank can trace its origins back more than 50 years to building societies servicing parts of regional Queensland, who now provide home loans, consumer lending, and a range of other personal and business banking services to a nationwide client base. These are sold through various channels, including branches, online, over the phone, and through distribution partnerships and a national mortgage broker network. Joining me to discuss more is Managing Director Martin Barrett. Martin, welcome to TCN TV.
Thank you. Thank you for having me here.
Auswide Bank managed net profit after tax growth of nearly 17% in its FY20 after adjusting for the effects of COVID-19. How was this achieved in such a tough and trading environment, and particularly in the second half of that year?
Yes, we were very pleased to have a strong year. We have had the last 5 years that have been very strong for us. So it's a consistent growth story for Auswide Bank. But really it's a matter of looking at a number of strategic items for us. One, we're doing more with partners today. So rather than using our own distribution, we're using the distribution of others, and that includes fintechs. We're also been managing our cost of funds very strongly and changing the way that our deposit build-up looks. But also we have been improving very significantly our processing in terms of our loans, and that's specific to improving the service that we're providing to brokers nationally, which is opening up a national home loan opportunity for Auswide.
Auswide also reported stronger net interest margins and loan book growth in its FY20. But looking ahead, how can the bank continue to protect its margins and grow its loan book in FY21 in the face of another RBA rate cut and very competitive loan product markets?
There's a few things there. The first is that we continue to enjoy a significant amount of support through regional Queensland in terms of deposits. So we're continuing to see deposits flow in the door, grow very strongly. And that's allowing us to reduce our reliance on some of the wholesale funding lines, which may be a bit more expensive. So we're managing that net interest margin very, very well, and we expect that we'll be able to continue to do so. The second one there, though, is that there are pockets of real strong activity during this period of time. One of those pockets is first homeowner activity in the market. We've seen a significant increase in terms of first homeowner purchases across Australia. And Auswide Bank was created to support first homeowners. We've been getting substantial support from brokers, but also through our regional Queensland markets supporting first homeowners. So that, we believe, will continue to provide us with strong growth in the period ahead.
Now, Martin, Auswide, like other Australian banks, announced COVID-19 support initiatives for its customer base, including loan repayment deferrals. How many of your customers are still not meeting their loan obligations, and to what extent will the continued wind back of JobKeeper impact borrowers' ability to repay loans?
Going back to what was the peak of deferment, which was around about sort of May, June time, we saw that about 9% of our book was placed onto loan support or deferment. Fast forwarding to the end of October and included in our AGM update, so we're now down to about 1.5% of that customer base. So it's come off quite materially, which is really, really quite good. It suggests that the vast majority of our customers were cautious, but not necessarily finding things as challenging now as the COVID-19 environment continues to perhaps mature.
Now, back in July, APRA advised Australian banks to pare back their dividend payout ratios to no more than 50% of earnings. When do you think regulators will again allow banks to increase their dividends?
Yeah, we were pleased off the back of some strong financial results to be able to probably hold our dividend up higher than many others were able to, particularly in an environment where some paid no dividend at all. We do expect that APRA will change that position. They have made some recent statements that suggest that they could be reviewing that as early as at the end of this calendar year. So as things continue to normalise, I think as we continue to see the hardship position come off for banks and therefore the capital strain lessen, then we should see perhaps a more normalisation of dividends.
Now, Martin, for some time now, Auswide has seen mortgage brokers as a cost-effective nationwide distribution channel for its loan products. How has the emergence of fintechs complicated this relationship? And I suppose more generally, how is Auswide responding to the emerging digital competitive threat provided by fintechs?
So we continue to keep an eye on fintechs and continue to work with fintechs. Our size actually is a great enabler for us to partner with fintechs, and we have partnerships with peer-to-peer players, and we're talking to fintechs regularly about what opportunities might exist between ourselves and them. But our number one competitor are the big four banks. And I expect it will be the big four banks for quite some time. The fintechs, to a degree, will actually be some advantage to us as we continue to work with them to sort of for mutual benefit.
And finally, Martin, Auswide's FY20 AGM presentation listed several financial targets centred around cost control, margins, loan book growth, and also returns. How are these tracking as the bank nears the halfway mark of its current fiscal year?
Yes, so we've held out a number of metrics that we've been focused on now for the last few years. That is a return on net tangible assets of 10%, and we've now exceeded that return on net tangible assets in our first 18 months. We also held out a stable to improving NIM, and we've been able to achieve that too over the course of the last 18 months, and above system loan growth. And our loan growth in the first quarter of this financial year has been very strong. So we're actually well on track. In fact, we're going to have to revise those numbers because those numbers primarily have been exceeded in the start of this financial year, which is pretty exciting.
Martin, thank you for the update and all the best to Auswide Bank.
Thank you very much.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV, and tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.